Good morning. Welcome to a Market Day Report. Welcome to a Thursday. It's a big day today. We've got quite a few things happening, including a rate decision coming from the Federal Reserve. That comes up a little later today. Tomorrow, we get a World Ag Supply Demand Estimate, or WASDE report from USDA. That happens at 11 o'clock Central Time tomorrow. We've got another report that rolled out earlier this morning. Export sales. We'll break that down in just a moment. First off, let's see how markets traded in the overnight session. And we'll start with the corn market, unchanged at 426 and a quarter. March, May, July all higher, with September a couple of ticks lower. And for soybeans, up 5 3/4 on the November at $10.25, or it's a little easier to just say a tick above $10. 10 cents higher on the January. What about the wheat market? We'll look at July contracts in Chicago, up 1/4 cent, 607 and a quarter. And what we call Kansas City, or hard red, down 1.5 pennies at 601 and a half. And the December contract in Minneapolis, tick lower there at 605 and a quarter. In New York, cotton futures have been under pressure, but regained a little steam in the overnight session, 70.80 on the December, up 111 points. Brian Hoops is president, Midwest Market Solutions. Brian, a couple of things that kind of jump out. First off, that weekly export sales report out from USDA, and a flash, take two, flash sell.
Yeah, good morning, Tony. I do that all the time, it seems like. Yeah, we had another sale of corn this morning, and it was a pretty routine number, 120,000 metric tons. So 2 cargoes sold to that unknown destination, and probably won't attract a lot of buying interest just off of that news. The one thing that I think trade will be watching is lack of soybean purchases this week. We didn't have any announcements yesterday, just the corn this morning. We've only had one soybean sale, pretty much routine numbers, just a couple cargoes this week. And so it's been a very slow week. Only one sale out of 4 sessions for soybeans. Might start to become a little concerning for the trade. As far as our export sales numbers go, and we received these at 7:30, so we did have time to trade these numbers already. But they were outstanding. Corn, 108.9 million bushels, and it looks like Mexico bought almost 55 million of that total. And then China was a big buyer of soybeans once again. Soybeans were 74.9. Now that's down from last week, but again, a very strong number for soybeans. And China bought 44.9 million bushels of soybeans, and that includes the switch from that unknown destination category of almost 19 million bushels over to China. So when we talk about unknown destination sales for soybeans, a large amount of the time it is end up being China. And then wheat sales, they're just kind of a laggard here. They're on pace to meet the USDA forecast, but they're not doing anything better than that, 13.8 million bushels. So beans had a pretty strong overnight trade. They went and tested the highs from October the 25th, I believe, backed off of that after the export numbers go. We'll see how we want to trade today, but you go into tomorrow's supply and demand report. Trade's expecting small yield reductions of corn and soybeans, but in the case of the corn market, USDA in the last 3 years consecutively has raised yield numbers from October to November. So keep that in mind, that we're kind of bucking the short-term history if you believe corn yields will be lowered in tomorrow's report. And then finally, before I turn it back to you, it was last year, after this report was released, that's when we really started to turn lower going into the end of the year based off of good growing conditions in South America, which again, we have this year.
You know, Brian, I'm kind of, when it comes to one of these reports, I kind of like to set the bar low so that if USDA comes in a little higher, it's not a big deal. And this is not the way to, I guess, describe what we're looking at from production. Maybe in this case, set the bar high and let USDA come in a little lower would be the more optimistic move here, right?
Yeah, there you go. That's exactly right. I do think even if they do raise corn yields in tomorrow's report, there's a very high likelihood they will also increase exports and very well should increase ethanol demand, and that will lower our ending stocks. So I think your corn ending stocks tighten. It's the soybeans and soybean stocks that I am most worried about, especially if some of these previous purchases end up being canceled because South America's supplies become much cheaper in that January, February, March timeframe.
Okay, Brian, hang on. We're going to take a break. We'll come back in just a moment. We'll talk cattle, we'll talk hogs, and we'll do that as Market Day Report continues in a moment. It's Market Day Report. Let's look at how livestock markets ended the session yesterday. Live cattle 62 higher on the December at 185.40. 77 higher on the February at 186.72. So what will we start trading today and tomorrow? We'll find out in a moment with Brian Hoops as he comes back in to join us. Feeders, $1.55 higher on the November at 247.70 and January at 244.02, $1.67 higher. And the hog trade, how about it? Well, it moved higher. And really, there for a while, every day I said the hog market was moving higher until it didn't. And I think we had, 6 sessions where it was lower. December hogs yesterday, buck higher, 82.12. January holding on to that 98.17, up 37. All right, let's bring back in Brian Hoops. Midwest Market Solutions, help us make some sense of this. What's happening?
Well, not great export numbers this morning for either beef or pork. They were both marking year lows. Pork sales at only 14 million tons. Beef sales only 8 million tons. Let's look at the hog market first. We saw a couple down days earlier this week as we pulled back from that weekly resistance. This hog market's really traded technically, so we went and filled the gap that we had left previously and then rallied yesterday. Now, I think you probably will see some follow-through buying in the hog market this morning, whereas in the cattle, we're going to continue to struggle. Despite the stock market being sharply higher yesterday and continuing higher today, the futures market looks like it's going to open a little bit softer. The bid ask is 30, 40 lower in the cattle this morning. The beef sales this morning, as I said, marking year low, going to be a disappointment. And we're really dependent upon how much beef we can export. And our box beef sales that we announced on Monday, they were disappointing. They were down from last year, down from last week as well. And then the sales this morning were a disappointment. So cash outlook really no better than steady. I know there's some asking prices, the 190 to 192 range. Probably be happy to take that 190 at this point, with the futures being fairly heavily discounted to those cash bids.
Okay, quickly, Brian, any other markets you've got an eye on?
Well, we always want to watch what the stock market is doing. We're hitting new all-time highs, and we'll probably continue that trend. Crude oil market pulling back here a little bit. That's one that I think, given the policies of the incoming administration, we're probably going to look at cheaper prices going forward, unless there's a war escalation or something like that. Prices in the $70 range probably going to appear too cheap in the upcoming months.
All right, Brian Hoops, Midwest Market Solutions. We'll see you back here tomorrow.
You bet. Thank you.
All right, Market Day Report continues.